Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, October 20th, 2009. Well, here we go again, folks. The market's selling off today to the downside. Not a steep drop by any stretch of the imagination, but a solid drop across the board. The Dow is down 78 points, the Nasdaq is down by 18, and the S&P 500 is down by about 9 points on the day. Now, the key is this, guys. You had great earnings from the likes of Apple and Texas Instruments. Let's take a look at AAPL first. There you can see it. Apple's still up about $9 on the day, although towards the lower side of things, and believe it or not, slightly bearish pattern here, but nonetheless, it is still up $9 on the day. Those earnings were solid. Apple is a very niche driver for the consumer. So you see a lot of people that are diehard Apple buyers. They will always be Apple buyers as long as they have a credit card to charge it on, in other words. And ultimately, that's why you're seeing it. You're seeing a solid quarter from Apple there on those results. Next up, Texas Instruments came out. Now, Texas is more interesting. Texas Instruments had good earnings, and it gapped up, and then it sold huge, bounced huge, and then kind of has just trailed down. And again, this is also by the lows of the day. So even though Apple's still up $9, it's also by the lows of the day. Texas Instruments here is trading at the lows of the day. That's quite a bit off the highs. It's only up 27 cents on earnings, which is not much at all. Now, the real kicker today was this, guys. You had building permits coming out for home sales, and there were fewer homes building permits. Again, that's signaling weakness. That's a big issue here, guys, is that you're continuing to see things that are signaling, in my book anyways, that this economy may not be quite as strong as you might have thought. Now, that doesn't necessarily mean we're going right down, though. Remember, it's all about master levels. Look at the chart here in front of you. This is the chart of the SPY. Now, number one, we've been up into what I call the Great Wall of China. Great Wall of China, I've given to my premium members. They're all appraised of it. They know fully well what to do in that situation. You have to join up to really understand what I'm talking about there in regards to the Great Wall of China. But that has been stated, and it continues to hold true and continues to be nailed day after day after day. So that's something you need to understand. Now, the key here is this. Look at the 110 level yesterday. 110, which also coincided on the on the S&P 500 at 1100. This could not be punctured yesterday. That's a big level. We had called that out as a scalp play yesterday. It was a beautiful scalp play as well. Now, you come into today, the market does gap up. Why does it gap up? Well, volume was light. The dollar was pretty much flat on the day. And overall, you had that earnings from Apple and Texas Instruments gapping those stocks to the highs at the highs of the day. Remember, they came off the highs of the day since then. And you've seen the market really come off those highs as well. But nonetheless, the gap up here, small gap up, and then just hard selling comes in. Now, why did we see hard selling today? What was the catalyst? Simply put, guys, the dollar. Remember how much the dollar had an effect yesterday on driving the markets up? It's in the reverse today. In fact, we saw a little bit of an dollar squeeze today on the UUP. Check this out, guys. Look at this move up on the dollar. Unbelievable. And I'll draw some trend lines on here so you guys can see it. Look at this move up. All the way up to the peak. Here's the peak. Here's where we started the day, right down here. Here's your first push. I showed you that candle. Remember the first candle in the spiders I just showed? Look at this big dollar push on this candle, and then I want you to look at the SPY first candle of the day. Reverse of that, right? Big down candle. So big up candle, big down candle. And then really what the UUP does, which is the dollar ETF here, or indexed monitor, is that you saw the market, just the dollar, continue to rally up really until about 11:30, 12 o'clock. And at that point, look at the spiders. What happens? You have the dollar dropping all the way into that 11:30 to 12 o'clock area right down here, as you can see right down there. And from that point on, the market has slowly bounced. And you can see that beautifully here, all right? Look at this. See the bounce in the markets? What's happened to the dollar? Take a look. Oh, would you look at that? The dollar has come off the high. So you continue to see how the relationship with the dollar to the markets has been inverse. It continues to be inverse, and that's really the bottom line. So yes, the economic data was not that strong, but that really cancels it out. I mean, bottom line is when we started the day, you had a small gap up in the markets. It wasn't until the dollar really started to jump and go higher that the markets really came down here pretty decently in the afternoon or early afternoon, late morning session of the day. And again, you can see as the dollar's ticking down, look at the dollar hitting another, just pushing down as I speak to you guys. Right there, you should be seeing the SPY moving up, and sure enough, you can see a little bit of a green candle. Now, you've recaptured this 200 moving average. See this low today, and I want to show you guys this. Very interesting technical side of trading here. Look at the low from yesterday. Scan back, here's yesterday. See that exact low right there, where we pushed down early before we rallied? What happens to be the low today? There it is. You see, you pierced it. You never got below it. You never broke down below it. That's very, very important, guys, to see that level and understand that level. And you can see right there as the market moves up beautifully off of that as the dollar comes in. But this level was yesterday's lows, and that basically tells you that we gave up everything from yesterday. Granted, we bounced back a little bit, so we're off those lows a little bit at this point. But the market really has given back pretty much everything it gained yesterday. And that, again, revolves around the master levels that I've dictated to my premium subscribers at InTheMoneyStocks.com, in the Research Center, in the chat room. That's all what it's all about, guys. You have to understand these levels. There's reasons why I initiate shorts at certain points. There's always a reason behind it. It's calculated. It's looked at on the charts. It's analyzed. And that's what you want to find out. That's really what the key that the hedge funds are looking for that we consult with, guys. When you talk about consulting to hedge funds, money managers, when we get talk to them, they're all about, well, what is this level? Tell me a level where there's going to be a major level. And that's what we're able to do with unbelievable accuracies. So again, there you have the nice sell-off. Now you're getting a bounce. Why is the market bouncing? Simply put, the dollar continues to bounce here, pull back just a little bit, and you're going to have resistance right here at the 20 moving average. Now, if you get above this 20, which is at 109.10, you're going to look for this yellow trend line. This yellow trend line coincides with this low of the day. By the way, there were scalps all along here. Scalps, good scalping day in the markets today because you had a pretty, look at all the bounces you had, and they're all off key levels. You can see the yellow line right here. Look at the bounce. All right, that was a beautiful scalp. Look at the 200. Beautiful scalp. That's another one I called out in the chat room and did as well. They're just scalps galore every which way. But the point being is if you get through this 20 moving average, you're going to look for this yellow line, which also mirrors the low pivot from today. And that yellow line is at 109.25 to 109.30. If you get through that, you're going to look at this orange line above it and then the 50 moving average coming into play. After that, you have the master, a key master point of interest at 109.68, and then finally the 110 level. Those would be your upside. Look at the push here, and I want to just show you the dollar. Look at the UUP. UUP, nice little red candle, right? See that red candle? Look at the drop. Nice little red candle. And again, what is the spiders doing as we speak? And this is minute by minute. Look at the candle. It's the reverse of that. Perfectly reversed from the UUP, which is the dollar index again. And you can see that kind of move in that phase. So again, just to summarize what you have going on here. Apple earnings were good. Even Caterpillar. Caterpillar did fade quite a bit today, but it's still up nicely on the day on back of earnings. You had some other good earnings out there, Texas Instruments. But the dollar continues to rule the roost. You had some negative economic data, housing sales, housing permits, excuse me, slowing, which tells of weakness coming in the future months. And that as well kind of canceling out the earnings issue, and then really it just leaves the dollar. And the dollar, again, initially squeezing higher and then starting to pull back off that squeeze, and that's really going to be what we're going to watch for the rest of the day as being the big catalyst of it. But again, Apple Computer, very nice earnings today, up $9.64 right now. Texas Instruments, good earnings as well, but only up 31 cents, getting a small bounce. Caterpillar up $1.83, that's well off the highs from over $61 today to 59 and change now, but nonetheless good earnings there as well. Going back, one last look at the SPY. Follow the 20 moving average. If you get above that 20, you're going to go right to that yellow trend line. That's what your next spot will be to watch. All right, folks, have a wonderful rest of the day. Join the Research Center. Join the chat room. You want to make sure you're appraised of all our next calls. Again, major money to be made. We'll see you soon. Take care.